Welcome to the 86th episode of Kanga Crypto News, your weekly summary of the most important developments in the cryptocurrency market. I'm Kuba, here to bring and deliver the latest developments and the stories that matter the most. A reminder, everything you'll hear is a collection of facts and data gathered by analysts. This is not an investment advice. Now, let's begin. So let's start with the topic that drew the most institutional attention this week. In the last week of December, Ethereum-related ETF products recorded some of the strongest weekly inflows of 2025. According to aggregators, hundreds of millions of dollars flowed into Ethereum ETFs, with individual products registering daily positive inflows counted in millions. ETF reports show that some institutional funds increased allocations, while certain entities are considering mechanisms integrating staking. XRP spot ETFs continued their winning streak. This is now the fourth consecutive week without a single outflow. In the last week, $230 million flowed in, and on December 1st, the ETF recorded its best day, attracting $89.5 million, according to So Value. This positions XRP as the strongest player of the week and the leader of the entire ETF segment. Solana ETF posted another solid result, closing the week with $20 million in inflows. We are now in the sixth week of positive inflows since the product launched. The best day was December 2nd, when Franklin Templeton listed SOAS on the NYSE, generating $45.7 million in inflows. The ETF tracks the Solana price plus up to 100% of staking rewards, with Coinbase as custodian under BNY oversight. In Bitcoin, outflows continue, but Vanguard's entry is shifting the narrative. Between December 1st and 7th, Bitcoin ETFs recorded $87.77 million in outflows, suggesting a slowdown in the aggressive November accumulation trend. However, December 2nd brought a game changer. Vanguard announced its entry into Bitcoin and Ethereum ETFs. The company, which for years dismissed Bitcoin as speculation, made a complete reversal, and the market reacted instantly. On the same day, the Bitcoin ETF registered $58.5 million in inflows, driven by dip buyers anticipating a new wave of institutional capital. These inflows significantly improve institutional liquidity for Ethereum and may affect token availability for short selling. If ETF providers begin integrating staking or cooperating with custodians who enable staking, the net effective yield for institutional investors changes the demand dynamics. Ethereum underwent its scheduled update on December 3rd, named in some reports as Fusaka or EIP 7918. The changes focused on stability and preparing the base layer for future rollup improvements. Industry analysis emphasized that the update improves block processing and reduces bottlenecks for rollups. While it wasn't a revolution in functionality, work on stability and scalability is critical for further institutional capital inflows and for RWA or tokenization projects relying on consistent L2 layers. Now that the dust has settled on the upgrade, let's look at real-world assets. In the background of global capital flows, market data showed increased inflows into equity and bond funds, a global liquidity picture, which partly influenced how institutions allocate capital between traditional assets and tokenized products. Reuters reported significant weekly flows into equity and bond markets, creating a backdrop for capital rotation. Macro liquidity impacts the crypto market. Expectations of rate cuts and capital rotation shape the risk premium of digital assets and determine whether capital flows into ETFs or RWAs. From institutional flows, we move to new listings and projects. Selected projects announced launches and listings. For example, HumidiFi, with token, confirmed its launch via Jupiter on December 3rd. Other platforms announced listings and completed contract swaps for their tokens. These events appeared in local industry reports. New issuances and technical migrations, like contract swaps, influence short-long liquidity, can generate temporary volumes, and serve as signal of the health of the DeFi ecosystem. New features arrive, liquidity mining, integrations with DEX, and L2s. The week of December 3rd through 9th brought a mix of technical upgrades, institutional inflows, and continued exchange of supply reduction. It's a setup that supports moderate recovery, but one that still depends on liquidity and macro decisions. This has been Kanga Crypto News number 86. Leave a like, subscribe, and come back next week. See you in the next recap.
We are Kanga, beyond crypto.